Hey everybody, Boris, also BK Forex. Welcome to the weekly technicals for the COM dollars, for Aussie dollar, for dollar CAD, and Kiwi dollar for Jan 29 to Feb 2nd, 2018. And this was a week where the COM dollars really woke up. There was no low volatility trade in the COM dollars. They raced up against the dollar as much as anything else. Although, as usual, a lot of very idiosyncratic trade flow, and actually I think creates some very interesting opportunities for us on the crosses, which we'll take a look at in the next video. But for now, let's just take a look at the levels of where the COM dollars trade. The Aussie is really at that 80, 82 level. I'm going to get back to the charts now. This is, to me, the most interesting chart of all, because it is on this precipice of either just breaking out and running for the hills, or we are so close to the turn in the Aussie, and I will show you why when you look at the charts. Dollar CAD, actually one of the weaker pairs on the COM dollars because of all sorts of idiosyncratic risk. Today we had the CPI data, which was relatively cool. Next week we have Canadian GDP, which will be interesting to see how strong that is. All of that against the backdrop of still slow and steady and quite uncertain NAFTA negotiations that are happening, which could be kind of a death knell to the Canadian economy if U.S. decides to pull out of NAFTA in the middle of negotiations. And Kiwi, relative weakness to the Aussie, really big flame out of the 74.50. Not much on the, I think there's a little bit of data risk on the Kiwi. We'll take a look at the calendar just 1 second. But overall, the data set this week in COM dollar land is relatively limited. We basically have a trade balance, which is not a super important indicator. Kathy is mildly bullish. That report, we have the the Australian CPI data, which is very important. That actually could be interesting because that could be the fundamental excuse for a little bit of a turn here, because Kathy sees sharply lower food prices, and of course higher Aussie over the last month and a half certainly is going to have a more dampening impact on inflation as we go forward. And I think that's it. The only other thing we have is the GDP in Canada out of Wednesday. Again, we are bearish that number because there was significant weakness in trade and retail sales. Canadian economy kind of peaked and came in, and I think now with the pall over all of business investment due to NAFTA uncertainty, it's going to be hard for me to see how the Canadian dollar could perform well over the next week or so. To me, it's a relative weakness trade, definitely worth taking a look at as we go forward. And then also, what do we have? The services index, and that's about it. I think, PPI after PPI, but PPI isn't going to matter nearly as much as the CPI data out of Australia, and that's pretty much it on the event risk calendar. So looking at the charts here, this is what I want to show you. Let's start with Aussie first. So here's Aussie. This is a daily chart, and we are really at nosebleed territory right there, right up against the resistance. But I think you need to be a little more forgiving in your trading, because if you look at the weekly chart, the really hardcore point of resistance is 81.63. This goes all the way back to 2015, so which was kind of former support that then became pretty strong resistance at this level. So to me, the argument here is basically 81 to 82 is the short range, meaning that you short anywhere into that range on the assumption that this 1, 2, 3, 4 quadruple top should hold. If you're past 82, you are unambiguously wrong. Aussie is just a locomotive, and I would want to be stopped out of the trade at that point. But I think it's a reasonable bet here, although it's certainly a relative strength trade that the Aussie at least makes a run towards the 82s. So it's kind of a positioning bet here. I'm not saying that it won't go higher. I'm just simply saying there's very reasonable chance that it will not go higher beyond 82 unless U.S. data is completely horrible. I mean, there's always that possibility. But aside from that, I think it can kind of hold around these levels, and you have a reasonable chance here. Aussie is not my favorite short by any means in the COM dollar land, but I'm just sort of pointing this out to you guys in case you want to structure a longer-term trade against this position. If you're looking for a dollar bounce, these are probably relatively decent entries on the Aussie against these positions. Kiwi is much weaker. This is the weekly chart, but let's look at the daily chart, and I'll show you why the Kiwi story is much weaker. Look at this flame out. Whenever Kiwi has a pretty decent flame out, it's usually a pretty strong indicator of corrective action. Sometimes it kind of like over here, it will kind of test the top end of the flame out candle of the shooting star candle. But generally, I think we raced to 70. Basically, what is this? 70. What's the high here? 74.35, 74.50. As I said, really the operative stop against which the Kiwi seems to, I think, really find a lot of resistance. It did find a bit under 73, but this was a pure anti-dollar move at the end of the day in New York today. It's hard to short. I mean, it's really hard to short these kind of candles that look like they just want to stretch higher. But my argument is this is not a single entry short, or this is not sort of a quick short. It's a positional short. I'm fully accepting of the fact that it could race up all the way up to the 74s. But my point is the risk of correction here is relatively strong, and I'd rather be on the short side at these levels, given the fact that we're at the top of the range. We've really put in, the sellers really came in hard at this level. And if there's any kind of a short covering rally in the dollar, we're certainly going to be able to see some corrective move in the Kiwi. Now, the last trade on the COM dollar land is CAD, which is, strong against the dollar today in the sense that, that it ended up lower against the dollar. Dollar CAD ended up lower, but not nowhere near as strong as as Aussie and the Kiwi, and that's because of all, as I said, all of the individual specific event risk to the caddy. Right now, essentially, this 22.50 is the operative stop point in the caddy. As long as we kind of hold that level, the Canadian dollar has a reasonable chance, I think, kind of stabilize, make a run, perhaps those 2,500 on the upside. It would then actually put in a higher low on the longer term chart, and would suggest that perhaps maybe we have a race back up to those 2,700s. But this is really both a dollar trade and a Canadian dollar trade. If we get headlines next week on NAFTA, it could completely change this trade around. In other words, if the NAFTA trade, if the NAFTA news just creates more and more tension, I think it's quite likely we just really race up hard because the Canadian dollar is already weak. If we get some kind of resolution, there might be a spike lower as a relief rally takes us. But the spike lower, I think, kind of finds a lot of buyers at the 122.50 level. The other interesting thing, by the way, as far as Canadian dollar goes, is it's getting a lot of support from oil. Oil is 66 bid, but oil is bid at 66 strictly because the dollar is weak. And I know that everybody's going to argue with me that it's supply, demand, OPEC, none of it really matters. Oil is much more of a financial instrument than it is a commodity instrument, in my opinion. And when the dollar gets weak, oil gets stronger. It's a natural inverse relationship. So if we get a rally in the dollar, the corrective move in the oil is very likely to be pretty strong. We could shave $2-3 off the barrel, which in turn would then feed back into a positive dollar CAD move. So a lot of interesting possibilities next week. And certainly going to be a week just as fascinating and exciting to trade as this week was. And I wish you guys the best of luck, the best of trading. Boris, over and out.